typically, we know that commodities are going to go up and down. But with commodities now, given the extra layer of Trumpism, do investors need to just sort of take their profit and run or ride it out? How do you make that call?
That's a very good question. And investors have different levels of risk comfort.
Sure.
And if you know exactly the level of risk you should be taking in your portfolio, I would recommend writing this out. If you do that, you avoid the ups and downs of the markets and you don't become myopic doing investment decisions based on emotional sentiment. And once you've gone through a few of these ups and downs in the markets, you get to realize a pattern of your overall portfolio, and it helps you stay in for the long term. So my answer to that question is stay invested if you have the proper built portfolio based on your risk profile.
And what do you ask yourself as an investor to know what kind of investor you are? Because you're right, not everybody has the stomach for it.
Yeah. I'll give an example. 2008, the financial crisis, TSX, S&P 500 dropped anywhere between 40 to 50%. And let's call that an extreme. Those were like certain events that you don't see too very often, thank God, because of that.
Fingers crossed, yes.
Exactly. So how would you react if your portfolio fell 15%, 20% over the same time period when the markets went down roughly 50%? And that's the base question you start with. What would you do? And if the answer is anything else I'm going to sell, then we have to revisit your portfolio. So you want to be able to ride those extreme downs. Now, can we see this happening nowadays? The last time we saw something that drastic was COVID 5 years ago. But we have seen pockets of the market decline 5 to 10% many times over the last 5 years. And again, if you have the properly built portfolio based on your risk profile, it helps you ride these waves over a longer period of time.
And should you then sort of have a price alert in your own mind? If I see this stock get to this, that's my comfort level, and that's where I pull out.
Exactly, yes. So you have stop loss in places and risk mitigation factors in place, absolutely.
Got it. Let's talk about Berkshire Hathaway, because you're saying it is something you could look at if you're trying to be a more sort of steady investor, looking long-term and reduce your volatility.
Yeah, you start with Berkshire's management, obviously Warren Buffett, the guru there. But you have to look at its track record as well. It has a history of outperforming even the S&P 500, and that's been very difficult to outperform, say, over the last 5 years, and it's done it significantly. But what Berkshire Hathaway provides you is access to private equity, and that's one area we really like at our firm. Private equity, potentially long-term, should be outpacing the equity markets because it takes time for a private company to cash out, to make a return. And while you wait for that time, yes, you want to be compensated with a potential longer return down the road. So that's why we like it. Also, if you have private equity as part of your well-rounded portfolio, it's not valued every single second of every single trading day. It's valued maybe once a month or once a quarter. And while these downs are happening inter-quarter, inter-month, your private equity is flatlining. So it helps reduce the portfolio volatility.
Okay, let's talk about also other ways to balance. Seeing North America in the flux that it is, should investors be looking more globally, and if so, where?
Yeah, last time I was on, I recommended 2 areas to look at: international developed markets ex-North America. And one way you can look at that, consider, is a Vanguard ETF, a VIU, I believe is a symbol. And that its highest exposure there is Japan and Germany. And if you look at Germany, recently they had a new government in place a couple of weeks ago, I think, a couple of Sundays ago. And they've already committed about $1 trillion over the next 10 years for infrastructure spending, defense spending. And for an economy that's really been stagnant in terms of growth, that's a turnaround. That's a 188-degree turnaround. And I think overnight, Germany was up about 3%. And that's directly reflected in that ETF, Vanguard Developed Markets ETF, ex-North America. So you get exposure that way. And that's on top of all the news or concerns around tariffs. That was just ignored in Germany, and the market's done quite well. So you look at that market in particular, I think it's up 15% year to date, where the S&P 500, I believe, gave up all its returns yesterday.
Yeah, I was going to say, we don't know who is exempt moving forward from the Donald Trump tariff threat. Right now, he's got Mexico, Canada, and China on the radar. He has made threats towards the European Union in the past, but I think he has his hands full. Do you think Europe could stay sort of outside of the fray, or at least for the next sort of few months or year?
I think they have internal components to help them ride out any of those threats. And Europe is a sustainable economy on its own, right? Trump, if we look at the tariffs, and if you don't mind my thoughts on that particular, yes, he announced 25% on Canada and Mexico and an additional 10% on China just yesterday, and we saw what happened in the markets. But Canada and Mexico, we're not paying those tariffs.
Yes.
It's the U.S. companies importing those goods that pay the tariffs, and ultimately that extra cost is passed on to the consumer. In my opinion, Trump is not trying to hurt his people. He's trying to help them. So it's a negotiation tactic. And we believe they'll be short-lived because he'll help rebalance the power of negotiation globally. Something came out just recently, about an hour ago, where he potentially talked to Prime Minister Trudeau about the
carving
taxes.
out the automotive industry. And
so we saw already that, and some thoughts on that as well. But Trudeau, he said, well, stop the fentanyl into the U.S.
Yeah.
And that sort of makes sense. If I'm the U.S., why am I spending so much money dealing with this issue when it's coming from another country? Why doesn't Canada spend the costs to prevent
Except the fentanyl's coming from Mexico, right?
Exactly. So same with Mexico. That's why the tariffs are imposed on Canada and Mexico. So instead of us imposing tariffs, talking about that, beef up security to stop fentanyl coming into the U.S.
And so Ottawa has the border plan, which is more than $1 billion, but some of it's in place, some of it's not. That's still to come.
Yeah.